You can actually buy a house with $0 out of your pocket. In 1977, the federal government enacted a law called the Community Reinvestment Act of 1977. This required the Federal Reserve and some banks to meet the credit need of the community in which they serve, and this include a low-income and moderately low-income neighborhood. This is why you see some bank offering you loan products that allow you to actually buy your house with $0 out of your pocket. So in this video, I walk you through the pros and cons of buying a property with $0 out of your pocket, and I do want to see your comments below. Let me know what you think. Is this something you will be taking advantage of, or you just don't like the idea of buying a house with $0 out of your pocket? If you're meeting me for the first time, hi, I'm Wale Lawal. I'm a real estate agent and a local investor here in the Houston, Texas area. I've helped so many people to buy and sell houses. So if you want to connect, I would say don't be shy, reach out to me. So I'll be giving you 6 to 7 loan products or loan organizations that offer this kind of $0 out of your pocket to buy a house. When we say $0, most of the time, as a matter of fact, 9 out of 10 times or 10 out of 10 times, you do have to live in this property because this is for owner occupy. So I will give you 7 of them. Number 1 is the Veterans Affairs, so which is a VA loan. Most people know about VA loans. You can actually buy a house with $0 out of your pocket using VA loan. The second one is the United States Department of Agriculture, which is USDA loan. Now this has some geographical restrictions, and it also has some restriction in terms of the square foot of the house, among other things. So like everything else, there will always be terms and conditions apply. So that is my number 2, the USDA loan. The number 3 kind of loan product is FHA loan. Now most of you know that FHA, they require 3.5% down payment. Yes, you do need 3.5% down payment to go through FHA loan, but that 3.5% doesn't have to be your money. It can be a gift from your family, your friends, even sometimes your employer. It can be a gift. That's what you should know. Also, there is a loan product that is still FHA, but it's like a 2 loan. They borrow you the 96.5 and the 3.5% is another loan. So pretty much you are getting a 2 kind of loan. Now the second loan is always carry a little bit of higher interest rates because at that point they are seeing you as more risk because you are not putting anything down. Now generally there is always going to be a catch. If you are not putting any money down, always ask them, please, what is the catch? Because trust me, they are taking so much risk, and for them to take such risk, they really want to make sure you will not default in your payment. Hence they want to get more interest to make up for the possibility of you defaulting on the loan. Now the number 4 loan product is the down payment assistance. Most community, most neighborhood, most counties offer down payment assistance loan products. These allow you to put no money down. They are pretty much again financing your down payment for you, so that way you can move into your house without so much worry and so much stress. Now there's always going to be terms and conditions apply. They have to make you go through some training, some home buyer orientation, some home buyer courses, and submit some documents just to make sure you truly qualify for that program. But there is those down payment assistance program out there, and if you do want to get some recommendation, I will be willing to provide them to you. Now you want to stick around to this video because I make some recommendation about the lenders that you can actually talk to, or which bank you can actually walk into and get some of these loan products to start your own buying process. Now the number 5 is the biggest one, which is the conventional no down payment loan and also no PMI. So this is a game changer for a lot of my clients I've worked with. Now these clients make good money, they have stable jobs, they have their financing in order, but they are busy entrepreneur that like to leverage. So they want to leverage 100% to buy a house. They are not struggling financially. They can easily put 20% down, but they understand the power of leverage. So they took advantage of 100% financing, which is 0% down payment to buy a house. And I'm talking about a house of up to $800,000, $1 million, even sometimes $1.2 million kind of house. Now again, these people are very experienced. They are very financially smart. Now the advantage to them is that instead of them putting that 10% or 5% down, they can use that money to invest in whatever they know how to do and get better return instead of tying down their money into that property. Now this 0% down payment is not for everybody. So, and I will give you the pros and cons below, but just know that there is 100% financing, no PMI kind of loan. Now, they do have one or two requirements you have to meet, because again, they are taking a lot of risk by giving you 100% to buy that house. Pretty much you have no skin in the game, and it means that they are less protected. I mean, the bank is less protected. Should you default, now they have to go through foreclosure, which can be very, very painful. Now, the number 6 kind of loan product that also offer you 0% to buy your house, 0% down payment to buy a house, is called the 80-20 piggy loan. 80-20 piggy loan means that they are borrowing you 80% of the cost of buying the house, and the remaining 20% will be another loan, which is going to be at a higher interest rate. So pretty much again, similar to the FHA I discussed above, you are now getting 2 loans. So the second 20% of the loan will typically come with a higher interest rate, again because they are borrowing you everything to buy the house, and it means that they are taking a lot of risk on you. So if this is not something you're comfortable with, you might want to consider putting as little as 3.5% down, so that way you have a skin in the game. Now, I've mentioned a couple of pros and cons. The number 1 pros is that there is no PMI. Most of these loans don't have PMI. Now, some do have PMI, and that's why you want to really talk to the lender or to your mortgage broker to know, hey, am I going to be paying PMI because I'm putting no money down? You really want to understand that. If they say there's PMI, you might want to do, okay, what is the cost of PMI, and how much is that over the cost of the loan, or how much is that even in the next 5 years? If you see that those costs are really adding up really fast, you might want to change back and just go and do a conventional 5% down or a 3.5% FHA kind of loan. Another cons is that no money out of your pocket, like I've said many times. So you pretty much move into the house with no money out of your pocket, and which bring me to the number 3 cons is that you can actually move into the house with no money, and you can buy the house instead of you waiting to continue to save to buy the house. You can actually buy the house as little as 60 days if you have a good credit score. Typically, this kind of loan will require you to have 600 and above credit score. Debt to income ratio less than 45% is typical, and also there should not be any kind of foreclosure, some collections on your history, because again, this is a very high risk loan that they are offering to you, and they want to make sure that you are financially responsible and also financially stable so that you can be making your monthly payment consistently. Now, that takes me to the cons. The cons is that it can be location restricted. So if you're buying, for example, you're using the USDA loan, it can tell you that, hey, you cannot buy in this place because that place is not low income people. So that is the number 1 thing you should definitely consider, that can really limit what kind of property you can buy, which location you can buy them, how big the property can be, among other things. The number 2 cons, which is the disadvantage, is that they do come with higher interest rate and additional fees. As you already understand, again, lending is based on risk and reward. If they are taking so much risk on you, you can expect that they will charge you higher interest rate. If they are taking less risk, then you can expect that the interest rate can be a little bit favorable to you, because now you are having more skin in the game. So it can come with higher interest rate and some additional fees that they may not charge somebody that is putting 3 to 5% down. The number 3 cons is that it has stringent qualification requirements. So for you to qualify for this kind of loan, again, they want 600, not less than, they want credit score not less than 600. They want you to be financially responsible. They don't want to see so many missed payments on your credit history, and they also want to make sure that you fully understand that you are not putting any money down. That is, sometimes your monthly mortgage payments might go up a little bit because you are 100% leverage. You don't have any skin in the game. Number 4 is that you can easily increase your monthly payments, because if you're not putting any money down, then you are borrowing 100% of the money. So instead of you paying a mortgage of maybe $2,500 in a month, if you put 10% down, it might take you to about $2,700, $2,800, because you don't have any money down. So which also limits that you don't have any equity in that property. The last cons is that it limits the amount, the dollar amount you can actually qualify for to buy a house. So let's say you put in 10% down, you might easily qualify to buy a house of $600,000. But if you're not putting any money down, that may limit you to $500,000. So let's say you are somebody that really want to buy houses in that 600, but you don't want to put any money down, then you'll be forced to buy a house of $500,000. So these are the 5 cons that I've seen many people just say, you know what, this is just too much, I'll just put, something down. so I don't have to deal with all these their restrictions. Now, I did mention that I'll give you the lenders that are offering this kind of loan products. There's actually a lot of them, and I would say you should start with your mortgage broker. So mortgage brokers are like your car dealership that sells so many cars. So they sell so many loan products. They offer so many loan products. You should start with that. If you don't have a connection with any mortgage broker right now, you can easily comment below and I will reach out to you, or you can actually shoot me a text message and I'll give you the recommendation for those lenders. Now, they are the ones that will collect your application and shop around for you and tell you that these are the top 3 banks or top 3 lenders they recommend you go with based on your financial profile. Now, they do get compensated by the lender, so you don't have to worry about paying them. Now, the number 2 option is your credit union. Go through your credit union, Navy Federal, Veterans Affairs, New American Funding, Rocket Mortgage, even Cadence Bank, among many other lenders that do this kind of product. As I mentioned to you, this is like a federal government law that require them to meet the credit requirements, credit needs of their community or the neighborhood in which they do business. So if they do business within 2-3 miles of your house, there is a high probability that they are offering that program. So don't be afraid, don't be shy. Go walk into the bank or call them and see who can offer those programs for you. Now, that being said, I have mentioned the pros and cons of this 0% down payment. Do you think this is something you will actually be doing? Do you see that there's a lot of more pros, there's a lot of more cons than the pros? Or do you think that you really want to build equity in your home and you always like to put something down? Or you think you want a lower monthly payment, hence you want to put something down again? So let me know in the comment section. What do you think? Do you think this is a good idea? Do you think this is not something you want to do? Or do you think I missed something out completely from this video? And I will be in the comment section replying to you. As always, make sure to like this video, subscribe to this channel. Please share this video with anybody and everybody you think will benefit from this, because this is a good amount of information that I see that so many people just don't know about. People always ask me, hey, do I need 20% to buy a house? No, you don't. You can buy a house with $0. Actually, right now I just gave you all the steps, all the intricacies. That being said, I have a very similar video talking about this and you can watch it here. Thank you. Bye-bye.